Started my first startup in '97. The world told me I was insane.
Our goal is creating future economies that are more regenerative and sustainable.
Something didn't match up. Why hasn't this become the next big thing? And that's where we invested.
The whole purpose of achieving anything in life is measurement.
Welcome to our panel on the state of construction finance. Really excited to have assembled this panel today for everybody. We're going to share a deck shortly, but would love to kick it off with some, quick intros. The goal of this presentation is really to talk about a recent survey that Rabbet did, talking to various construction lenders as well as real estate developers on, what they have changed during the pandemic, as well as continuing a survey we've done for 3 years now of just the state of construction finance and how it could be improved, and just the sentiments as to what's going on. So there's some interesting opportunities this year to compare to last year as well as the previous year to see how things had shifted, and so I'm really excited to welcome a real estate developer and a construction lender to bookend both sides of this conversation today, and we'll have them introduce themselves. So Jim, if you'd like to go ahead first, love to just tell us a little bit about who you are, where you're at, and what kind of product type that you focus on.
You want me to go first, Will?
Yeah, go for it, Jim.
Okay, all right, great, thanks. Jim Dobbie with Avanta Residential, and Avanta is a wholly owned subsidiary of Hunt Companies, and we are a build-to-rent development company. So we're building neighborhoods of homes, 150 to 250 homes in a neighborhood setting, all for lease. And so we've been working on this platform for a couple of years, have a few projects under construction, and have recently purchased some more land to start some new projects. And really excited to be a part of this panel today because we're in the market on almost daily on construction loans for our active projects.
Awesome. And on the other side, Trent.
Yes, hi, Will, thanks for the introduction, appreciate it. My name is Trent Williams, Vice President of Asset Management with BridgeInvest. So we are a private lender, real estate senior lender based in Miami, Florida. We originate and execute and administer construction loans as well as other types of bridge loans all throughout, primarily the Southeast, but we've started dipping our toe in the Northeast, Midwest, and western parts of the country. As kind of Jim mentioned, we are senior lenders on the construction side, so we're constantly looking across, at our development partners to see, what the landscapes look like, and always interested in good opportunities, primarily multifamily, but we also have done hotel construction. We've done ALF construction. We have an industrial sector, a couple of projects in our portfolio at this time. So really, we'll play in any asset class, but we'll focus primarily on the multifamily retail office spaces.
Great. And it looks like Nick Durham with Shadow has joined us. Nick, did you want to say anything?
Yeah. I just wanted to apologize for botching the introduction. I had this great introduction teed up for Will and Jim and Trent, but you guys obviously covered it. I'm here. I will conduct the Q&A session when you guys finish your talk. But very interested in hearing more, so I'll leave you to it.
Awesome. So I'm Will Mitchell. I'm the CEO and co-founder of Rabbet, a construction finance platform that helps real estate developers, lenders, and stakeholders manage the construction finance process. So centralizing all information around budgets, documents, rules, covenants, approvals. If it has to do with getting people paid on a construction project for real estate developers or lenders, we want to help with it. And so, this is the survey that we've kind of done as a way, from my experience as a real estate developer in Washington, D.C., in which I found that this process was time consuming and frustrating for most people involved. And the opportunity to bring technology to this space was a passion of mine. I've loved construction from a young kid. I got AutoCAD for Christmas in 7th grade. And here I am, you know, building technology for the space a long time later. So really excited to continue these discussions on how, frankly, everybody working together can make this better for everybody involved. As you know, just as a high level, our payment survey last year estimated that the cost of slow payments in the construction industry accounted for more than $100 billion of cost last year. And so just by kind of improving this construction finance process, we could save $100 billion in the US alone. And so really excited to talk about the different details of our survey today and the thoughts from these two great gentlemen. So with that, I'm gonna go ahead and share my screen of the kind of quick projection that I have together here, assuming y'all can see that just fine.
Yep.
Great. We already did quick intros, so I'm gonna skip over this slide and just kind of focus on, you know, the 3 takeaways, you know, from the survey that were kind of most notable. So one of the takeaways, which shouldn't be overwhelmingly surprising, is that processes are going digital. It was trending that way long before the pandemic, but as we do this, you know, conference virtual, which would have probably not been as, you know, common before the pandemic, just like everything else, the construction finance process is going digital. And the second part was how kind of the pandemic caused collaboration to be more of a challenge. You know, things that were probably easier to do in office in person were, you know, really noted as far more challenging, and we've got some slides on that later. And then the last is just discussions around opportunities for automation. You know, this highlighted a lot of manual tasks that were time consuming. And so, you know, the survey continues to emphasize that this process remains manual and that the industry as a whole sees there's some great opportunities for automation. And so with that kind of backdrop of the key takeaways from the survey, love to just kind of ask a question to the panelists about, you know, how has the pandemic impacted your construction finance processes? I know we talked about some, but would love whichever, you know, wants to kick us off with, you know, how have things changed for you guys?
Happy to go, Will. Once again, this is Jim with Avanta. And so, you know, I guess, you know, just with the adoption of, you know, people being remote, working virtually, you know, just increased adoption of digitalization. You know, you know, what we've been doing is, you know, working with processes like Rabbet. We've been working with our lenders. We've been working with our general contractors to try to figure out how to do this a little bit easier. And because we don't, at least during the main part of the pandemic, your meetings, your face-to-face meetings in the construction trailer, going through, you know, pencil draws and things like that, you know, was, you know, obviously more difficult. Traveling was more difficult, and so, you know, we were forced to do things, you know, in a digital manner, and so it's, you know, it really has helped. It's streamlined. It forced people to adopt and to change, because there's kind of no other way. And so it's, I think a lot of people out there are saying that, you know, it's the pandemic accelerated the adoption of technology. I agree with that wholeheartedly, and including in the construction finance and the, you know, draw request and the approval process.
Yeah, I remember my first job. You know, one of the biggest takeaways that I had from my boss, Brian Andrews at Kettler in DC, he was like, you can't solve problems over emails. Like, or you have to like go to the job site. You have to look at stuff. Like, that was like drilled into me from my like first time on a job site. And so, you know, adapting to how do you solve problems and do this digitally was certainly, I think, antagonistic with a lot of existing processes in the real estate space, and how to really embrace technology as a way to accomplish those goals is something that I think will be long-term beneficial everyone. But Trent, curious to hear your thoughts.
Yeah, I agree with both what you and Jim are saying. Well, not to one up you here, but my first construction job, we were still using paper and pencil for timesheets. So that was 10 plus years ago, and obviously that's a rapid acceleration. That's been archaic these days. But no, I mean, I from my perspective within lending, within BridgeInvest specifically, we adopted the Rabbet product actually mid-pandemic, and I would say that's really solidified and helped us, like Jim was mentioning, streamline a lot of those challenges, to get over those challenges like working remote and having to bring together people and information easily, so that you can be apart, you can be in different locations and still kind of process things, review things, and conversate over things much more efficiently than you had. Will, you made the comment about communication and not, you can't really solve things over email and all that. I 100% agree. I think one of the coolest things that I think our company has adopted is just a lot of these virtual interactions. Will, I gave you this example on Friday, but even now that we are back in the office, and I'm here in my office today, and I would say all but 2 people or so are in our office today. Even though we're in the office and we're conducting meetings, we're still holding virtual meetings. So like the people across the hall are literally in a meeting with me virtually. And I think that's a kind of a good hybrid way to say, like, listen, we're all still in the office, we're getting back together, we're able to kind of collaborate and communicate, but we're also able to utilize the technology we have and help each other keep those communication chains open and efficient, even during this crazy pandemic period.
And one of the things that we had talked about kind of as we were getting started today was this process of raising money, right? So, construction finance is a lot about relationships, right? So your relationship between BridgeInvest and their borrowers, between Avanta and their lenders. And there was a number of lenders or developers that were not interested in doing the same types of deals in the pandemic. And so people needed to make new relationships, to find new partners, whether it's on the equity side or the debt side. Talk us a little bit about how you've gone about building relationships virtually that, I think there is this, expectation. And as we've all raised money, all 3 of us, I think during the pandemic, raising money from people that you actually never get to physically meet. How has that process been, and do you feel like it'll stay this way going forward?
Yeah, I can start, Will. So I've had 2 interesting experiences through the pandemic. One is I started to raise some money pre-pandemic, but then I closed it during the pandemic, and then I started working on another round in the middle of the pandemic, and about to close that round now, coming out of the pandemic. And so,
congrats,
coming out of the pandemic. So, it was interesting because in the beginning we kind of did the traditional, roadshow, going around meeting with people, face to face. But then, as we started to really narrow it down, and start to really negotiate with various groups, the pandemic started to take hold, and people really just jumped to the going virtual. And obviously, as when you're raising money and the pandemic's happening, people got a little cautious and nervous, and things absolutely slowed down. But jumping to Zoom meetings, and I didn't have to go there, every week and meet with them face to face and discuss every issue, and people really adapted to that, and it worked. And then, starting my second round, that was really putting together a deck and doing a virtual roadshow, and that was later on in the pandemic, and it worked. It worked well. People were very adept to it, and we had often 12, 13 people on a call, going through it, and the questions were flying, and very productive conversations, and quicker actually to get these things put together, because it's, you're not trying to get 12 people that might be located in different countries all in the same room at the same time, at the same place. And so it certainly made scheduling much easier, and just the fact that people were willing to go through this process, do it virtually, just through some Zoom meetings, and it was refreshing. Now, can't say that we closed the whole thing virtually. I wanted to, meet who I was getting into business with, and they wanted to meet who they were getting into business with. And so, eventually we did have multiple face-to-face meetings, but by that point in time, we really were able to narrow it down and speed up the process. And then those face-to-face meetings were really just occurring with very few groups who, at that point were, well up to speed with, my platform and what I was trying to do and what the funds would be used for. And so then when we actually did get together face to face, it was a very warm meeting, a very productive meeting, and we could really understand the nuances, the relationship that we were trying to embark on.
Great.
Yeah, I would echo a lot of those sentiments. I think the adoption was kind of, it was a necessity, right? It was something that you kind of had to do to be able to survive. I think we also took an approach of, changing a little bit of our marketing strategy too. So, on top of just the virtual meet and greets and, fundraisers, et cetera, we really kind of hammered into a lot of like LinkedIn postings, reaching out via other means to try and get more, drum up some more excitement, drum up some more interest. And, you're also, I think what we also were sort of subtly doing there was showing people like, hey, listen, like, we've adapted to this. We can handle the virtualness of working in this environment, and that's why you should invest with us.
Yeah, I mean, it was interesting. I think at the beginning of the pandemic, there was this, sentiment going around that like, if you don't have an existing relationship with somebody, you're not getting a deal done, right? Like, at least on the venture capital side, which is where I do my raising of money more often than the equity and debt markets. It was like, if you don't have an existing relationship, like, forget it. And then like, it almost seemed like overnight, like a month into, they're like, wait a second, we still need to do business. So we're going to adapt, and we're going to like do it virtually and get to know people. And so like, it seems like that was one of a very, very short-lived moments of the pandemic where people adapted really quickly to the Zoom and this other stuff. And, I think as far as, you spoke of kind of a roadshow, the ability to go and do 5 meetings in a day, which might have taken 5 months to schedule and going to 10 different cities, like, is a huge benefit for a lot of firms. And it is one of the reasons I've been a little bearish on the return of business travel, is I do think a number of these meetings that required a lot of travel before are going to recede to being more kind of executive level meetings. Like I think your point, Jim, of like, I still want to know who I'm going to go and like sign this contract with remains critical. Like at the end of the day, like it's people doing business with people, and you want to actually meet somebody. But for the vast majority of the meetings, I think it can get done virtually. So great. Well, let's get,
just real quick, just to that point. Well, I mean, just reiterate that, when we did get together, I mean, it was just, the meetings were so much more productive as opposed to just going kind of doing the rote, knocking through a deck, explaining, hey, this is Jim and this is what I do. And so it really was much more in depth and so much more productive, and enjoyable, frankly.
Yeah, and Will, you mentioned on that travel component, like we typically in the past, like we wouldn't be afraid to go do several, this is more on the origination side when we're looking at new transactions, but we wouldn't necessarily be afraid to go do several site visits, maybe like one when we're doing initial offers, maybe one once we're under diligence. That's almost become obsolete, and we're really as you kind of alluded, it's really just that last executive level meeting once we're kind of at the finish line or we're in a good spot to where it makes sense. And so what that's kind of done is just kind of consolidated that travel process or the travel function down to just those key critical meetings that you want to have between the people signing the contracts, essentially.
Yeah. Well, let's continue on. One of the things that, we highlighted during the kind of survey was this internal collaboration, right? It actually was a big kind of struggle for developers specifically, as well as kind of this struggle for lenders as well. You can see the other things that we noted here, kind of efficiency being impacted by the pandemic. But it wasn't as much external collaboration. Like people were still able to collaborate fairly well externally. And so I'd be curious kind of, how has internal collaboration changed for you all? I think Trent, you gave a great story of, hey, you're still using Zoom to collaborate, even though you're in the office. But what have you all done to kind of improve or minimize the impacts of internal collaboration for your firms?
Yeah, I'll go first here. So I think that's certainly been since I've taken over this role, and it's interesting because I actually took over this role basically right before the pandemic started. So
you're welcome. Congrats, welcome.
yeah. About 3 months before I joined the firm. A big focus of me and my department is the collaboration and is the communication. So I am consistently on a daily and weekly basis having touch points and checkpoints with our analysts, with our team, to make sure that deals are moving forward, things are getting done. Even as simple and granular as daily stand-ups. Every day around 9 o'clock, we'll get together for 30 minutes and just talk what's hot today. It really is just an emphasis on the communications to say, okay, what are we prioritizing? What needs to get done? Where do we need to spend more time focusing? And really, the technology, the work from home element certainly was a challenge to that, but we have the tools, we have the technology to be able to accomplish that. So for me, it was very much just about let's make sure we're over communicating, let's make sure we're over coordinating so that we're not dropping the ball anywhere, and it really just kind of that emphasis on that communication collaboration.
That's fascinating. The daily stand-up is at least a very, very integral part of like the tech startup culture. But I
got it. Scrum Masters.
Right. I don't recall ever having that at my real estate development firm. It was, that's fascinating that you instituted that. That's great.
That's actually an ode to your friend Jesse. You'll have to talk to him about that. Okay,
I will. Yeah. Jim.
Yeah, I wouldn't say we have a daily stand-up, but but we do have a good rhythm, which it was interesting. We were working on this platform, this Avanta platform, before the pandemic, trying to. It gave us the freedom to kind of go off and adopt some of our own procedures a little bit, and so we were starting to stick our toe in the water with some technology, and then the pandemic hit, and it threw us in that direction. Adoption of Microsoft Teams, which was huge, and just really working with our IT group to integrate SharePoint, kind of behind the scenes for our filing systems. And so now we have our weekly pipeline calls, and and everybody's sharing the screen, and people are all typing in their updates as we're talking through things, at which before it was just email, and with attachment, and that just is always unwieldy. And so, yeah, so pandemic threw us in that direction, and now, it's so second nature at this point in time. I mean, it's not like, anybody's going back. We're just continuing to dive in deeper and deeper and deeper. And so it's great fun. It's working well for us. It certainly wasn't without its hitches along the way. And some of it was, pilot error, like on my part, just trying to learn how to use some of these systems and getting taught. And then part of it was just making sure we all had the right technology, both at our home office and our work office, because most of us are working in two places now, at least, and so it's kind of double the potential problems.
So just to confirm, Jim, this weekly meeting, was that existing pre-pandemic, and you kind of updated the way you did it, or is it a new meeting you kind of created as a result of the pandemic?
No, it was existing beforehand. However,
okay.
Now it's updated, and I'd say much more productive. Because it's not just a phone call. It's we've got the visual, we've got the pipeline out there, and people's names are next to the project, so you can't hide. Nice,
great. So just rethinking some of the existing processes to be better, more engaging. Awesome. Well, continuing on, the next question, as you kind of track projects, like financially through, so we talked a little bit about originations, what steps do you see people kind of doing in the industry? We talked a little bit about supply chain concerns, Jim, before we got started. So curious, are you all doing anything differently to track supply chains now than you were before? Before I say more, go for it, Jim.
Yeah, I mean, it's interesting. I mean, with projects that are under construction, it's whack-a-mole at the moment. What's going to be the problem tomorrow? Because for a while, I think everybody knows lumber was going crazy. So then that got everybody all spooked. And then lumber came back down, and then now I was at a conference last week, an in-person conference, my first one for a while, and that was the Builder 100, and it's windows in our industry, and people are trying to get windows, and it was funny. I was talking to these builders, and there's a few big window manufacturers, and they were all talking about the heads of those companies. And they were talking about these people like first name. It's like, oh, I talked to Nick last week, and I talked to Nick, and it's just, so everybody is just trying to figure these supply chain issues out as they go along, and so it's, I think Trent would agree. I mean, at the end of the day, it comes down to communication, and we're just talking to our lenders, our construction lenders, and our investor partners more than ever, and just sharing as much as we can. We have a mantra of bad news fast, because you can't hide from bad news. It takes a long time to figure out problems. I mean, we can go have a beer at a moment's notice and celebrate a win, but problems take a while, and you can't hide from them. So we're just sharing a lot of information and communicating as much as possible.
Hey, Jim, just a question, I guess, kind of, have you guys seen any unique strategies around material buying that's maybe been creative or has kind of helped any of this? The reason I ask, we have a project where, it's actually more of a rehab, retrofit rehab. And, our developer was looking to buy, 90 plus ovens and 90 plus refrigerators, all for apartments. What he was actually being told by the suppliers was, we can't sell you that many units. We're so short on material that, we can maybe get you 20 to 25 or, a percentage thereof. And you're going to have to go source the rest. So that kind of struck me as wow, you literally can't even buy in bulk anymore. because of the shortages or because of the risk or the fear of shortages. So I was just curious if you guys had seen anything on your end for different development of projects that maybe take different strategies for material purchases.
Boy, we're seeing it all over the place. For lumber, it was really a just in time. People weren't able to make large orders, and so they were just trying to kind of meter it out or ration it out just to keep people
flowing
in business.
Right.
And so I know. Talking to some land developers, they're going out and buying PVC pipe even before they're closing a construction loan because there's long lead times there, and so that's all at risk, out of pocket, heavy upfront cost for them, but they want to make sure that it's going to show up, and so it's different people are using different strategies, and between the developers and the contractors, we're all just trying to share the risk or and not take on an inappropriate amount of risk, and just once again it comes down to communication, but then long lead time items for bigger projects. I just see more and more developers trying to get out ahead of that and pre-buy or pre-order that stuff.
Or maybe that becomes pre-existing condition, or not pre-exist, but that becomes a prerequisite for executing the deal, right? It's like we need to go ahead and get the top 7 lead time scopes bought out, something like that.
Right. Yeah, we saw some folks now starting to treat those as allowances as opposed to hard budget line items. Was one strategy that I thought was relatively innovative, specifically during the framing and drywall kind of issues where people just, I'm not even going to bid it because I don't know what it's going to cost until I buy it. Sure. But one of the questions, I guess if you're, having all these kind of whack-a-mole issues, like obviously knowing the whack-a-mole issue as early as possible is the best part. So have you spent more time paying attention to CPM schedules as a result of the pandemic, or how kind of are you keeping track of what the next issue is, as far as what you need when, if the biggest thing I think that we're noting here about tracking is material potential delays?
Yeah, it's hard, Will. It just you just don't know what it's going to be until you're for us, until the contractor starts telling us, hey, I'm having trouble with this vendor, and some of the other items that we're seeing is just it comes into labor, with even trying to get new projects going, like surveyors. Where a couple months ago we could get a surveyor out in a week or two. Now it's over a month, and then it's taking them more time to convert the field work into drawings, and so it's unfortunately it's just dragging our projects out time frame, and then with respect to the land sellers, land sellers just want you to close faster, and so it's opposing forces, and it's creating some tension out there, that's for sure.
Well, I liked your phrase of bad news fast. I think I'll probably steal that one as a good kind of industry norm of, the things here about ensuring that things stay on track. It's really about, good communication and bad news fast, and, lean into, what's going on. So that's some great insights. So continuing on, kind of the next question, we talked a little bit about technology already, but what other technology, have you all kind of paid attention to, maybe on the job side or on the material side, that has impacted? So we've got Teams and obviously Rabbet already mentioned, but what other things, from a tech side? SharePoint you mentioned,
We've done a lot of we've been a lot of headway, I'd say, in the last year, also just on our internal processes, Rabbet being a key one, but also knowledge management. We've had a few technology solutions, so we're implementing now to effectively just streamline like the way we're able to search and find information. You know, we're in the process of developing like a pretty much like an intranet page just for our employees, to where, you know, if you need to get wire instructions quickly, boom, like you can just do a quick search and they pop up. So that was something I think, you know, we're a bit on this, we're a smaller company. So I think the to be able to streamline and pull all that information quickly and access it quickly is very, very beneficial.
Yeah, that knowledge base I think is a great, you know, frankly, most like alternative lenders and developers are smaller organizations, but having that centralized quick access of information so you don't have to go and find, you know, Betty to give you the answer of what you need.
Yeah, what's the file path location for that file again?
Right. No, quick access to information is a big, I think, struggle like that we try to solve, right? We tell people, it's like, hey, don't go searching for the most recent budget. Don't go searching for the last invoice. Like, you can just come find it really quickly. But that kind of solution for a whole company and the business practices is
that's right.
Jim.
Yeah, let's see, a couple things. One, you know, I mean, Rabbet's been good, but the, you know, I'd say the big mental shift that we've made during the pandemic and really where we've been going in the past couple of years is committing a little deeper to our vendors and bringing them under the tent. And so what I mean by that is, like, for example, that SharePoint that I was talking about, you know, giving some of our vendors, our key strategic vendors, access to that. So when filing is happening, you know, they're actually a part of that filing system as well. And so when we're on team calls, you know, we know that the latest and greatest, you know, budgets and everything are in there, and the vendors have as much responsibility to keep those project files up to date as we do. And so, you know, early on, identifying, you know, who from each company is responsible, you know, owners of the project, owners of their portion of the project, and creating those stakeholders and enabling them to help each other. And so that's been big, and it's been a big shift for us here over the past year and a half.
I'm going to get in a little bit of my feeling of tech evolution theory right now, so I hope I don't bore people too much. But, you know, first, like, we started building software for, like, internal companies. You would have it at servers at your own company. Like, that was the first version of software. The second was, you know, now putting software on the internet and leasing software and software as a service. My feeling is the third evolution of software is where software starts to be shared between organizations to relay complex information. So this like internal belief of software that is only for you and your organization, I think will slowly, you know, have more and more connections between organizations. So not just connections between softwares, right? So Rabbet actually announced a partnership this morning with Avid Exchange. And so now our developers can quickly push, you know, their payment information to their accounts payable software. And so that internal connection. But this next phase that you're talking about, Jim, which is now connecting between organizations, so that if, you know, your general contractor is using a platform and you want to get that information in your platform, you can start to share information collaboratively between organizations. So really excited about kind of this belief that actually bringing people under the tent and collaborating is in the net benefit of everybody long term. So really excited to hear you talk about that.
Well, I mean, and part of it, Will, was when you know, we had started doing that, and then we started working with Rabbet and looking at Rabbet, and that was the same time that we're bringing on a general contractor and bringing on a lender. And so, you know, I just went out to these folks and I said, hey, you know, look at this Rabbet system, and oh, by the way, I'm going to ask you to use it and make you use it, but you know, you're not going to have to pay for it. I'm going to pay for it. It's going to be a project cost. but it's going to make all of our lives easier. And it took some work, some selling and some arm twisting, but I did get my contractor on it. I did get my lender on it, and so far it's working. And so, that's just another one of those kind of ways of, we kind of started thinking about how do we get some of these strategic partners streamline with us, kind of create our processes together, and so it can work. We did the same thing with using Procore more and more and earlier in our process, where before we were using Procore, you go through all your pre-development and then you hire a contractor and then they set up Procore. Well, we're moving that earlier in the pre-construction process, because Procore, between my construction group and the commercial general contractors, I mean, they just, Procore just works well for pushing questions back and forth and having that document trail. And so we started using that earlier in the process as well.
Awesome. Yeah, wonderful. Well, let's keep going. I know we're kind of getting kind of near the end of time, and I do want to leave kind of time for questions. So, the last part that we talked about collaboration, we talked about moving to digital. The last kind of trend that we saw was kind of the ability to automate or streamline kind of aspects of the project. And so, for lenders, we really, had this results of, hey, we could automate stuff around trends across the projects and portfolio, or identifying at-risk projects. For developers, around kind of cash forecasting and contingency usage were the two things that they highlighted as kind of opportunities to automate. And I don't want to make this about Rabbet. Rabbet's certainly working on a lot of these things. Believe it or not, we take these results and then we go and use it to make our product better. So we've launched an actual project forecasting tool. There's a webinar that we're hosting on it tomorrow if people want to learn more about project forecasting. But, as you all think about automation, right, obviously one way to quote unquote automate is, just having your developer or your lender or your contractor collaborating with you, so that like the information that they input doesn't need to be copied to another, format when they send it over to you. But is there anything, on automation, these trends that jump out to you, or other things that you would have thought were, high on the opportunities to automate in our space?
Yeah, I'll start here. I think this has also been a key focus of mine since I've joined the firm. Really trying to, more from an executive, but also internal and external reporting perspective. Really trying to automate and streamline the way that we're just pulling all this different data. Again, we're a smaller company, so we have data in this spot, that spot. We've put a big emphasis over the last year to build out, these very consolidated and concise reporting tools to help us, like you said, understand the trends, make better decisions, identify any potential risks that may be coming up, either current or in the future. And yeah, we've actually, we spoke with your group too. So we're looking at some potential opportunities to even work together in more collaboration with you guys on that from the portfolio side.
Awesome. And Jim, any other things you want to add on automation?
Well, it just, just looking at the slide here, both groups talk about identify at-risk projects and contingency usage. And in my mind, those two are quite linked. As a developer blows through their contingency, something's going on out there that they needed to use their contingency for, and that can raise concerns with the lender. How much contingency do we have left out there for any other bad news? And so, the more data you have around those two items and contingency usage, and once again it comes down to communication with the contractor and with the lender about what's going on the site with the project, the better. And so tracking that contingency usage is key.
Yeah, and I would take it even maybe one step forward, where like really good tracking of the exposures log or potential change order log, whatever you want to call it, is the first step of going to contingency usage, which is the next step to going to identifying at-risk projects. And so, you know, the one thing that, frankly, I've had a lot of conversations with lenders and developers and third-party consultants on this. Like, the change order log really is potentially, in my opinion, the biggest leading indicator of something going on a project. And the better you can track that potential change order log or exposure log. And so I did a blog post actually on this last week on like, hey, here's best practices for developers managing change orders, because believe it or not, there's really not that great content out there on this topic. But those two things being super helpful and, you know, understanding what's going on a project.
Yeah, I was actually going to bring that up earlier when we were talking about, you know, how have we kind of made sure that projects are staying on track financially. I'm pushing, and this I was also more on the collaborative side, but I'm pushing a lot of our projects and developers specifically to, you know, really think more about those contingency usages and those PCO exposure logs. You know, again, I come from a sort of an old school background where like your contingency should be, you know, filled up from the very beginning with potential exposures, and as you're either realizing them or not realizing them, you can adjust on the fly. But you know, your contingency, you know, the old school mentality of the contingency as a slush fund is one of the areas I feel like our projects tend to, you know, get most disadvantaged, just because the lack of awareness, right? Like you're mentioning with any potential exposures or at risks.
Yeah. Awesome. Well, I know we're kind of getting to the end here, and so we already asked that last question, so I'm gonna skip through it. You know, process improvement, obviously there's a lot of, you know, movement in this. It's been a big push. We kind of talked about this already. So with that, you know, I'll pose this question and open it up for questions for the group. You know, what do you all think is coming, you know, when we meet in our, you know, hovercrafts in 5 years to discuss construction finance? You know, what do you think is coming in the future and changing? You know, we talked a little bit about LIBOR as something that's obviously, you know, changing in the industry. But what are you all excited about or concerned about in kind of the future of construction finance?
Trent, you want to go first? I'll throw you out there.
Yeah, no, definitely. I mean, I think it's interesting kind of jumping into private lending, you know, with a construction background, because I can very much see the benefits of collaboration and communication, right? So we were talking earlier about, you know, risk sharing and potentially taking on different risk positions. I think there's innovation that could be made there between, you know, lenders and developers to say, listen, like we're, you know, that's the creative and collaborative side of the private lending world that I think is going to ultimately just become bigger and bigger. You know, at least that's kind of my perspective, where I see us getting more and more creative. We're you know, we're still not taking on same levels of, or, you know, more levels of risk, but it's just different types of risk, right? So, you know, maybe potentially taking equity positions while also lending, obviously keeping that within regulation and whatnot. But, you know, just the different ways that we can collaborate amongst developers to try and move projects forward, I think is what has me most excited about the future.
Yeah, well, I guess what I'd say is just, you know, you know, I bought a house a couple of years ago, and the residential industry versus the commercial industry, I mean, it's just the transaction process is, you know, so much more seamless, you know, and, you know, a lot less attorneys involved. The title companies are tied in with the, you know, the surveyors and the brokers, and it's just the transaction velocity that they're doing. They've kind of refined the process a bit, and you know, and then when we're working on our projects, you know, we're slugging it out for you know, loan documents and surveys, and I mean it's a grind. And so I think, you know, hopefully over time, you know, part of that process will get a little bit more standardized, a little bit more streamlined, and not every project is quite so custom, and things will flow a little bit smoother and easier.
Yeah, my money is on standardization. I really, you know, if you look at the AIA as a good example of, right, like the Uniform Contract Code came out in 1888, and it started to standardize how, you know, people agreed to communicate across the industry. I think just like standardization of Blu-ray disc. I think you both are old enough to remember, like, the laser, was it laser disc versus Blu-ray? That was the big fight to see who would win. Like, I think we're slowly getting to the innings that people recognize that having each of their own proprietary formats doesn't benefit them or the industry as a whole. And so if you could create an XML format that, like, is the way that you share information between any, you know, contractor management system and any development management system and any loan management system, right now everybody, you know, benefits. You know, currently the primary way of sharing information between organizations is through email, and you attach Excel spreadsheets and PDFs to email, and that lack of standardization, even in email, I don't know how much y'all know about this, but like the different email clients are so terrible. Like even sharing information through email is extremely complicated. And so I really believe that standardization will benefit everybody as we move forward, and, you know, trying to be a part of that, certainly here at Rabbet. All right, well, I'm going to stop sharing and see if Nick's going to...
And here I am.
There.
Just as you say my name. Well, cool. You do have a couple questions, so I think this, and I like these questions. I'll start with a question from Hugh. His question is: will blockchain technologies play a factor in future real estate finance? Will, how about I give you that one?
There's a guy in Boulder, actually. Nick, you and Jim are in Boulder. If you guys are really interested in this, I know an incredible engineer who's working on this. My feeling is that blockchain has a huge opportunity for title, but it would require adoption from the government, which I don't see happening anytime soon. But having this ledger of the history of a property that was, like, on blockchain is going to be opposed by the title companies, but extremely valuable for the industry as a whole. That said, I'm not a big proponent, and I wrote a blog post on this on Zero Tech a couple years ago about the tokenization of real estate on blockchain, and, you know, how you could, you know, put together some ledger and then fractional shares. I'm not a big belief that that's going to drive large term value for the industry and therefore not be widely adopted. So, and people should know Nick and I have some, you know, back cryptocurrency right now. So he went after me because he knows that I have a different opinion on this. But Jim,
for what it's worth, I'll share. I mean, we see a lot of at Shadow. We see different blockchain technology solutions that are trying to tokenize real estate. And I think, to your point, I think there are some interesting use cases for legality, liability purposes. We even had some people question validity of, like, project data. Like, it's all being self-reported, so there's you know, essentially misaligned incentives about how you're reporting project history and data and size of projects and scope and all of that. And so blockchain is a potential solution for that.
Right.
The reality, blockchain and any crypto network is incredibly slow and cumbersome to use. So really, the only use case that's been proven to date is money. Money is the trade-off you're making from a money perspective. Like, for instance, with Bitcoin, is you're trading the slowness and the cumbersomeness for massive security, like military-grade security via proof of work. And do you need that for real estate titles and securitization? Maybe, but right now it's just not. There's probably faster and more, you know, and more streamlined ways to pursue it. Would be my answer for that. Cool. Well, let's move on to the next one. So Trent and Jim, I think this is a good question for you all. what are the top 3 technology products in your developer tool set?
Oh boy. Obviously we've got the basics, but the like I said, we've been adopting Procore earlier in the process. But then you just have your project management type softwares like the Microsoft Project and Microsoft Suites, and then just the file collaboration, like I said, with SharePoint, kind of behind Microsoft Teams, which is really helping a lot, and that's what we've been using lately.
Yeah, we're actually pretty basic as well. We rely heavily on Microsoft Suite. Rabbet obviously has been a huge plus in our technology toolbox. Power BI for data visualization, things like that. Yeah.
Okay, great. I'm going to selfishly put the other question from Hugh up top here. This is actually something we've been exploring at Shadow, just how sustainability and ESG is impacting development financing, real estate investment, investors, LP demand. There is a question like, what are you guys doing, from a development perspective to demonstrate that you're checking these boxes? So Hugh's question is, how strongly are net zero commitments impacting construction finance?
So I think, kind of what you were describing, I think it starts at the top with the investors, right? I think, as a lender, we need to show that we are making investments and financing projects that are sustainable and showing positive net zero commitments, and then in turn what that ultimately trickles down to is obviously the development of those projects. So I see from our perspective, from the lending perspective, we are starting to see a lot more institutional investors saying, what are you guys doing with this? Like, what's your strategy? What's your philosophy? So I think from our perspective on the lending side, it really will start with the top down from the investors.
Yeah, and we're seeing that already. The ESG commitments are coming on pretty strong, pretty quickly. And just the other day, I got a spreadsheet from one of our investors saying that they hired their, they did their board meeting. They've got their ESG program in the works. They hired a consultant, and here's a spreadsheet, and fill this out and tell us how we're complying with these ESG commitments. And it's like, okay, and so it caused us to get together with all of our consultants and go through it and figure out how do we answer these questions. And and that was our investor. We're a subsidiary of Hunt Companies, and Hunt Companies has done the same thing. They've been talking about it for, ESG for, well over a year now, and they've just actually elected an officer to run the ESG program and to reach out to all of the platform portfolio companies and kind of herd cats and figure out what type of ESG programs we're seeing and how we're complying or beginning to comply and beginning to think about it and beginning to strategize. So it's coming on pretty strong. And then, in our industry, I work in the apartment industry, and a lot of the financing is driven by the agencies, Fannie and Freddie, and they've got green programs. Yep. And with those green programs, you get a little bit lower interest rate if you are within their requirements for their green programs. And so, so then that creates a direct benefit to the owners and the investors of real estate. Yep. And so I think people will put more focus on those green programs offered by the agencies, and maybe Trent's, a group like Trent's will start offering, kind of a green program as well. I don't know, maybe you are already, Trent.
No, not presently, but yeah, no, that's exactly right. That's the trickle down, sort of effect is like we have started looking at different, more so I would say just in your identification criteria for deals. What's the sustainability component? What's the ESG component that is kind of bolstering the transaction? So.
Yeah, I thought one of the interesting kind of insights I heard, at least with the uncertainty around pricing and kind of the general materials earlier this year, there became some actually more attractive pricing for some of the net zero kind of commitment. Like you could do some things that you couldn't make pencil before because the pricing uncertainty for some of the more common materials actually made it interesting to price and include some other stuff. So I think, as you all said, like it's a free market, and as long as the markets continue to kind of support and drive the ROI on making those commitments, developers and lenders will continue to do so.
That's great. Well, looks like we are out of time, everyone. Will, Jim, Trent, thank you all so much for taking time out of your busy days and hanging out at Shadow Summit. We seriously appreciate it.
Absolutely.
I'm gonna recommend that you guys, this panel, and everyone attending, actually flip over to the keynote stage now. We have a pretty special guest who's getting ready to speak. Former baseball player Mark Tashira. You might know him from his days at the Yankees. Will, you're a recent Texan, but he also played down in Texas for a while too. Mark is a real estate developer, so he's athlete turned real estate developer, and I think he's got some pretty unique insights on how he looks at real estate development and a lot of things we discussed today, in technology in particular, and how it's infiltrating the market. So with that, I will say everyone get over to the keynote stage, and we'll talk later.
Thanks, Trent. Thanks, Jim. This was a blast. Really appreciate your time, guys.
Thank you guys so much.